All right, welcome back to part 3, I believe. And in today's, we are going to talk about, if you haven't even seen it yet, the RSI, which stands for the Relative Strength Indicator. Now, the one thing I want to get clear in this video is that you should never, ever use indicators in your Forex trading. I can't repeat that enough. Just don't use indicators. And in today's video, I hope you understand why. Even if you're using something other than the RSI, just don't use indicators. Just don't. So the RSI, as many people know, is basically something that calculates the strength in the market. And the way that a lot of people will use the RSI, let me backtrack a little bit. So an RSI is an indicator. It basically tells you, like it says, the relative strength of that currency pair. And so what this line is, it'll kind of tell you the strength, this is 80%, this is 20%. And the way that a lot of people use it, if you've never used an RSI before, is that if the price or this line leaves this purple box, then what a lot of people will say that it's either overbought or oversold in this area. And a lot of people will believe that if price gets above this purple box, and I mean, you can change the settings in this too. A lot of people, I don't know. There's so many settings on it too. That's another thing about indicators. There's way too many settings that you can go off of, and they tell you all different things. They just don't work. But a lot of people will believe that if price gets above this purple zone or below the purple zone, then it's time to do what the chart is telling you. So for example, if the line gets above this purple zone, goes into our gray area, then that means price is overbought. There are way too many buyers. The market needs to correct itself and it needs to sell off, which it does perfectly right here. If we line it up, if you were to sell, you would have made so much money. And that's what a lot of people using indicators tell you, right? That it's so perfect because if we line it up, we see that it's overbought right here. Price is at an all-time high and it drops just like the RSI. Now, I want to get a couple things clear about indicators. Number one, indicators are lagging. And this data doesn't come out at the same exact time that candles close, because indicators are basically taking in price and time, highs and lows, and past candles in order to get the data that they're getting on their RSI. So when this is happening in the market, the RSI is not showing you this data because it hasn't taken this into consideration yet. So RSIs are lagging. Now, the reason that that's not good is because think about if you're playing video games, watching TV, or just going on with your daily life. Do you really want to play video games if they're lagging? Do you really want to watch TV if your service is bad and the TV is lagging? Do you really want to lag in anything in life? Probably not. So why would you trust something that's lagging in order to trade in these financial markets? If it doesn't work on video games, if it doesn't work on TV, if you don't like it in real life, why would you use it in your trading? It just doesn't make sense. And number two, indicators are just like everything else. They are just speculation. And people think that this is the end-all be-all, that you need to trade this way because it's perfect and it's going to work and all that stuff. But just like go and back test any type of indicator. And the reason I used RSI is because most people use the RSI. And again, this is a very popular, widely known strategy, that the overbought, oversold strategy. And for example, we can look right here that price is severely oversold, so it needs to recorrect. And that means we buy right here. We can make a little bit of profit, but eventually market comes down. And I mean, on the RSI, it went up, and all it really did was just consolidate in this area. You never made any real money, and then it hit your stop loss. Another example of this is right here. We are in an overbought territory, so price needs to recorrect and sell. We sell right here, stop loss right here. Market falls a little bit, but it just continues to go up. And when we're down here and the market's only dropped a few pips, then, what do we do? Because the market has to recorrect. It's probably going to come back up here. So that means the market has to rise even more. And it doesn't work. I'm sorry, but it just does not work, because a lot of people will look at these overbought, oversold territories. And there's so many other types of ways to trade this, but a lot of people think this is the golden way. And I'm sorry, just indicators don't work, any indicator. But a lot of people think that the RSI is good and mighty and whatever, but when you really take into consideration how you trade the RSI, it's just guessing, because any time that the market becomes overbought or oversold, one, it's lagging, so price is never going to be at this perfect moment. By the time that this data shows, price is probably already going to be making its move, and then by that time, you're really just guessing. And in hindsight, indicators look picture perfect because they always work, but it's the same as everything else. I mean, like, this is just a great example, right? You're oversold, so you buy here, you go into a little bit of profit, and then the market completely just plummets. So that's what a lot of people won't tell you about indicators. They don't want to show you the truth about indicators. I think they're the worst thing to use in your trading, so I would highly advise not to use them. And just indicators in general are just awful. So as you can tell, I'm not a person who trades with indicators. If you really understand how the market works, big banks, market movers, people like that, they don't use indicators. The way that they view the markets is that they look at liquidity and they look at where other people's markets are. It's just a retail way to trade because it's super easy and simple. If something seems a little bit too easy or a little bit too simple in your Forex trading, it's probably like that for a reason, and it's not going to make you a lot of money, because trading in these markets should not be easy. It can be simple, but if you're using an indicator just to buy and sell whenever a line gets above or below a box, that's definitely more to it than that. And a lot of people just want the easy way. They want easy money in Forex, and sadly it just does not work like that. So again, that's the RSI. I'll see you guys in part 4.